Welcome back for another deep dive. You've handed us a pretty big stack of reports on currency markets for this one, and, well, it's December 2024. Things are looking kind of interesting. I'm seeing movement all over the place, and I'm really curious to hear what you think is causing all these crazy exchange rate swings.
Yeah, you're right. This is a really interesting time for a deep dive. We've got US yields going up and the euro seems to be struggling. Plus, China is making some unexpected moves in the gold market. It's like we've got this big global financial puzzle in front of us, and we're here to figure out how all the pieces fit together.
Okay, let's start unpacking all of this. One of the reports is pointing out a big jump in those U.S. 10-year yields. They're back up to 4.4%. That's a big change from the drop we saw a few weeks ago. And usually the U.S. dollar gets weaker in December, not stronger, right?
Yeah, usually that's what happens. But this year is a little different. The Federal Reserve is probably going to cut interest rates by 0.25% pretty soon. But they were also hinting that they might slow down those cuts next year. This is mainly because inflation is being a little more stubborn than they expected. The core CPI, which is how we measure inflation, has been stuck at about a 0.3% increase every month for the past 4 months.
So the Fed's kind of in a tough spot then.
Yeah.
They need to keep inflation under control, but they also have to think about what might happen with Trumponomics, which honestly has always been a bit of a wild card.
Exactly. And all this uncertainty is causing a lot of speculation in the market, which is one of the reasons those yields are going up.
Okay, so that's what's going on with U.S. yields. But this next report is making me a little nervous. It's about the U.S. equity market, and it's painting a pretty worrying picture. It says that the U.S. stock market now makes up a crazy 75% of the global market capitalization, which is basically the total value of all those publicly traded companies. But the thing is, the U.S. economy itself is only less than a third of the world's economy. Doesn't that seem kind of strange?
It definitely raises some questions. To give you some context, the total value of the US stock market is now twice as big as the country's GDP. Some analysts, like Rukir Sharma, are even saying it's the mother of all bubbles. His argument is that the US market is way overowned, overvalued, and overhyped in a way we've never seen before.
Mother of all bubbles.
Mhm.
That doesn't sound too good. But bubbles can stick around for a while, can't they? Should we be panicking right now, or is it still okay to stay invested?
That's the question, isn't it? There's no easy answer, unfortunately. Bubbles can be really unpredictable, and they often last a lot longer than people think. So, staying invested might still be a decent strategy for now, but it's definitely something to keep a close eye on. I would say that keeping your investments diversified is more important now than ever.
Okay, diversification it is. Now let's see what's happening over in Europe. The euro seems to be having some trouble. It's barely holding on to that 1.05 level against the US dollar.
hmm
What's causing it to be so weak?
Well, it's a combination of things, really. First, there are those rising US yields we talked about, which naturally make the US dollar look better. Then we have the European Central Bank cutting interest rates, which usually weakens the euro. And on top of that, there's a lot of political uncertainty going on in Europe, especially in France and Germany.
Hold on.
Mhm.
Even with the ECB cutting rates, the euro is still having a hard time. I don't get it.
Well, it's not as simple as it might seem. Even though the ECB cut rates, German bond yields actually went up. And since it's the difference in yields between two currencies that really makes exchange rates move, this actually helped to stop the euro from dropping even further against the US dollar.
So it's all about the difference in yields. That's something new for me. Can you break that down a little more?
Sure. It basically means that investors are comparing the interest rates they can get from, say, holding a US bond versus a German bond. If the US bond is offering a better return, it becomes more attractive, and that increases demand for the US dollar, which makes it stronger against the euro.
Oh, I see. I'm starting to get it. So where does that leave the euro? I know the ECB's main interest rate is at 3.25% now, the lowest it's been since March 2023.
That's right. And the market is expecting the ECB to cut rates even more. So with the Fed and the ECB seemingly going in different directions on interest rates, it's pretty likely that the euro is going to stay weak for a bit. If you're planning a trip to Europe anytime soon, maybe now's a good time to book those flights.
Good point. Okay, let's switch gears and talk about India. It looks like the Indian rupee is on a slow but steady decline, moving towards 85 rupees per US dollar. But there's also a big change happening at the top of the Reserve Bank of India with the governor stepping down.
This is where things get really interesting. The current governor Das has done an amazing job managing India's monetary policy, especially during those crazy COVID times. Because of his work, India's foreign exchange reserves have grown to a massive $700 billion. dollars.
Wow, $700 billion. That's a lot of money. What else did he manage to do while he was in charge?
He brought a lot of stability to the rupee. He did this by reducing the impact of those offshore markets on the rupee and by making it a lot less volatile. Remember how even a tiny change in the Nifty stock index used to send the rupee on a wild ride? Those days seem to be gone.
So even though the rupee is getting weaker, it's happening in a controlled and stable way, which is good news for the overall Indian economy. What an impressive legacy for Governor Das. I wonder what the new governor will do.
Absolutely. A change in leadership at a central bank is always a big deal. Speaking of changes, let's take a look at what's happening in some other markets around the world. Starting with the Indian equity market, it seems like the IT sector is following the Nasdaq's strong performance. The Nifty IT index just hit a record high, breaking through the 46,000 level.
That's amazing. What about other sectors in India? Are they all doing this well?
Not exactly. The possibility of those rate cuts is making people feel a bit more optimistic, which is boosting stocks in PSU banks, which are those government-owned banks. But other sectors like the auto industry and FMCG companies are still struggling.
Interesting. So things are a bit mixed in India, but it sounds like the bond market is happy about those potential rate cuts, with the 10-year yield dropping to 6.75%. What about the Australian dollar? I noticed that commodity currencies went up when China announced their plan for a more relaxed monetary policy. But then the Aussie dollar seemed to lose those gains pretty quickly. What happened there?
Well, the Reserve Bank of Australia, or RBA, kind of threw a curveball with a statement that seemed to lean towards cutting rates. They decided to keep interest rates the same for now at 4.35%, but they admitted that economic growth has been weaker than they expected, and they hinted that they might cut rates next quarter.
So when they say leaning towards cutting rates, does that mean they're thinking about lowering rates?
Yep. When a central bank gives a statement that sounds like they might lower rates, it means they're thinking about making things a little easier to stimulate the economy. In this case, the RBA saying that made the Aussie dollar weaker, which kind of canceled out the positive news from China.
So the Aussie dollar is stuck between a rock and a hard place.
Yeah.
China wants to see more growth, but the RBA might be about to cut rates.
Exactly. And with Trumponomics back in the picture, the relationship between China and the U.S. is going to be a big factor in how the Aussie dollar performs in the future.
Right, that adds another layer of complexity. Okay, last but not least, let's talk about the South African rand. The reports show that it broke out of its recent range and actually got stronger against the U.S. dollar. What caused that to happen?
There are two main reasons: some good news from China and a jump in gold prices. Remember how we were talking about China's Politburo and their plan to relax monetary policy? Well, their central bank also decided to start buying gold again for their reserves, which they haven't done since May. That move made gold prices shoot up, hitting $2,700 per ounce before falling back a bit.
And because the South African rand is a commodity currency, it followed gold's lead.
Exactly. South Africa produces a lot of gold, so its currency is usually affected by changes in gold prices. The rand initially got stronger to 17.60 against the US dollar before weakening slightly.
Okay, so it seems like the rand got a boost from both China's policy changes and the increase in gold prices. But what's next for the rand?
I don't think the US dollar is going to get much stronger against the rand from here. The positive news from China and the strong gold market should help the South African currency. But of course, there are always other things happening, so we can't be sure.
I'm starting to see a pattern here. It seems like everything is connected.
You're definitely picking up on something important. Yeah, you're absolutely right. It's like this massive interconnected web. You pull on one little thread and it can cause ripples everywhere. It's what makes these currency markets so interesting and sometimes maybe a little bit overwhelming.
For sure. We've already talked about so much: the U.S. yield situation, the euro having a tough time, and now we're talking about India, China, Australia, and South Africa. It's a lot to keep track of. Is there any way to make all of this a little simpler? Like, what's the most important thing for someone who isn't a currency expert to understand?
That's a really good question. If I had to sum it all up in one idea, I'd say it's this: everything is connected. These reports really show how something happening in one part of the world can have a chain reaction that affects the entire global financial system. It's kind of like a giant game of financial chess where every single move matters.
Okay, I like the chess analogy. So, for example, the decisions that the Federal Reserve makes about interest rates in the U.S. can have an impact on the euro, the rupee, and even the South African rand.
Exactly. And it's not just interest rates. Political events, economic data, even small changes in what central banks are saying can create shockwaves in these markets.
Yeah, you know, that news about China and gold really caught my attention. The fact that their central bank suddenly started buying gold again after being quiet for months seems like a big deal, don't you think? It makes you wonder what they know that we don't.
It definitely makes you think, why now? What are they expecting to happen? Are they trying to send a message to the rest of the world? With Trump back in the White House, the relationship between the U.S. and China is more uncertain than ever. And that just adds another layer of complication.
And we know that Trump hasn't been afraid to criticize China's economic policies. He's shown that he's willing to use things like tariffs and trade deals to try to gain an advantage. So listener, if you're holding any gold, I think it's a good idea to pay close attention to what's going on with China's reserves. It could be a sign of what's to come.
I totally agree. Keep an eye on how the gold market reacts to China's actions. It could tell us a lot about how people are feeling about the global economy and what might happen in the future.
This is all super interesting, but I have to admit it's also a little intimidating. How can a regular person possibly keep up with all of this without getting totally lost?
I know what you mean. It's easy to feel overwhelmed by all the information and opinions out there. I think the key is to focus on the fundamentals.
Okay, so what do you mean by fundamentals when it comes to currency markets?
I'd say start by understanding the basic things that make currencies move up and down. Things like interest rates, inflation, economic growth, and political stability. These things are always important no matter what else is happening in the world. They're like the foundation of the currency market.
So instead of trying to follow every single news headline, I should try to understand those bigger economic forces that are at work.
Exactly. Once you have a good understanding of those basic principles, you can start to see how they're affecting what's happening in the currency markets. It's like learning the rules of the game before you try to predict what's going to happen next.
That makes sense. It's a more strategic approach, looking at the bigger picture instead of getting lost in all the small details.
You got it. And remember, even the experts don't always get it right. The currency market changes all the time, and there's always some level of uncertainty.
So it's not really about trying to predict the future perfectly. It's more about understanding the main things that are driving the market.
That's a great way to put it. And that understanding can help you make better decisions whether you're investing, traveling, or just trying to stay informed.
Okay, so let's recap what we've learned so far in this deep dive. We've talked about those U.S. yields going up and how that's affecting everything else. We talked about whether the U.S. stock market might be in a bubble, something to definitely watch out for. We looked at why the euro is struggling, the change in leadership at India's central bank, and China's surprising decision to buy gold again. And through all of that, we've seen how connected these markets really are.
Exactly. And we've talked about how important it is to understand those basic economic forces. That can help you feel more confident about navigating this complex world.
It's definitely been an interesting journey. Thanks for joining us for this deep dive into the world of currency markets. Until next week, stay curious, keep learning, and maybe even try your hand at doing a little currency forecasting yourself. Who knows? You might discover you have a knack for it.
You're right. It's definitely not boring. There's always something new going on. So any final thoughts for our listeners out there as they try to make sense of this crazy currency world?
Yeah, what's the most important thing they should keep in mind?
I'd say the most important thing is to never underestimate how powerful information is. The more you understand about how the global financial system works, the better you'll be able to make good decisions. Whether it's about investing or traveling or just trying to understand the big economic forces that are shaping the world around us.
Knowledge is power,
Right.
especially when it comes to money. Anything else you want to add before we wrap up?
Oh, yeah. Actually, I'd really encourage our listeners to go beyond just these reports and explore the currency markets on their own. There are so many great resources available online, financial news websites, educational podcasts like this one. Just keep learning, keep exploring, and keep asking questions.
That's great advice. Who knows? Maybe someday you'll be the expert helping other people understand these markets. It's been awesome exploring all of this with you.
I've really enjoyed it too.
So let's do a quick recap of what we've covered in this deep dive. We started by looking at those U.S. 10-year yields and how they're causing ripples all over the world. Then we talked about the U.S. stock market and whether it's heading for a bubble. Definitely something to keep an eye on. We explored why the euro is struggling, the change in leadership at the Reserve Bank of India, and even China's surprise move back into the gold market. And through all of that, we've seen how interconnected these markets really are.
Yeah. And we've talked about how understanding those fundamental economic forces can give you more confidence as you navigate this complex world.
It's been quite a ride. Thanks for joining us on this deep dive into the world of currency markets. Until next time, stay curious, keep learning, and hey, maybe even try your hand at a little currency forecasting. You never know. You might just have a hidden talent for it.